Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com. I founded it back in 2003 to provide you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here with our 21 mean reversion systems with 80 to 90% winning trades, and of course our famous KISS trend following systems. Nothing out there like it. You should check it out. Again, not going to go over that right now. Let's get to the topic of this newsletter. This is the January 10th newsletter from Breakpoint Trades. And doing a new format tonight. You can actually see me finally. I went out and bought a webcam. Still getting used to some of these. But again, I think the videos are overall continue to improve. But anyway, let's get started here. Like I said, this is a state of the market technical analysis review, and it's January 10th, 2024. Here's the table of contents divided into 7 major sections. Same general theme as I always keep. First off, the opening discussion, which I'm having now. Then we're going to discuss our mechanical systems. We closed out some awesome mean reversion trades yesterday. Awesome gains. I hope you guys caught those. We went long last Friday. I sent out trade notifications to all subscribers. If you're on YouTube, you wouldn't have gotten that. That's why you should become a subscriber. And of course, the KISS trend systems have been nailing it. Then we'll look at the general market. We'll look at some indicators, dollar, commodities, and follow up with some trade ideas. As you know, a lot of people talking about the SEC today approved some rule change to pave the way for Bitcoin ETFs. So as a result, most of the Bitcoin ETFs and stocks are way up here after hours. It was pretty easy trade, quite honestly, kind of like taking candy from a baby. A lot of us bought those today, and they're up nicely after hours. Again, as far as the key events for the week, tomorrow, the CPI. So let's see how that one comes in. And remember, administration note, both Steve and I will be traveling away from Monday, January 15th to Wednesday, January 17th. That's the first time we've both been gone. Usually, one of us will go, the other stays and covers all the newsletters. That's the first time we both are going out of town. We'll both be in New York at an event. Again, you guys will be okay for a few days. We've never done that in 15 years. So again, all right, let's go ahead and move on. And let's talk about these mechanical systems. So here's the mean reversion systems that went long last week. I sent out a trade notification last Thursday evening and early Friday morning that we were going long several of these systems. You could see the systems here: trend pullback on ES, trend Momo, S-Trap, and of course for the SPY ETF, we had the trend pullback and the QE swing 3. Remember, there's 21 mean reversion systems. Okay, and basically 3 of them had triggered. They all had closed out. Remember how the mean reversion systems work? They're not looking to stay in the market and capture entire trends. They look for a statistical opportunity when you get a pullback in an uptrend, and they take the trade, they get the trade, and they get out. Okay, so a lot of these are in the markets for short term. But again, very nice trades here, and you can see the on the MES futures, we run these 21 systems on ES futures and the SPY ETF. But on ES futures here, you can see the nice gains that we were locked in just under a week. Again, easily would have paid for your membership for a few years. Next, let's move on to some of the KISS systems. So here is GBTC on the KISS system, right on the website in the STS tables. KISS system on GBTC, that's a Bitcoin-like ETF. It's not exactly a Bitcoin ETF, but kind of like it. And it went long on October 17th at a price of 22.16. So right here, you could see set its initial smart trailing stop. It raised its stop all that time, keeping it wide enough not to be hit on noise. Current stop is at 35.10, and the trade is up 85.3% from entry. There's been 17 smart trailing stops since this entry. So that's a great example of how the KISS system works. And again, KISS system tables have been live since the summer. So subscribers to Breakpoint Trades have been following these. They would have received this notification back in October. Awesome. But again, that's a great example of the KISS system going long, sticking with the trend, but always raising that stop so you can protect those profits and not give a bunch of it back in case something crazy happens. Next, let's take a look at some of the other KISS tables. So again, when you go to the KISS system tables in the system section, you'll see these various buttons for the basket, the Mega 10, NASDAQ, S&P 500, top 100 ETFs. There's actually more than 100 ETFs there. I think there's about 120 or more. There's all the Dow 30 stocks. And of course, you have your favorites. Remember, you can go there. You can set your favorites by clicking the stars, and it'll send a trade notification email to you once a day whenever there's a new change. If there's a new entry, if there's a new smart trailing stop, if there's an exit. Anyway, these are the top 100 ETFs, and you can see how it works here. So today, these are the ones that received new smart trailing stops. GBTC, which I just discussed. Like I said, it's up 85%. The 17th smart trailing stop. DRN, it's up 33%. There's been 10 smart trailing stops. It went long on, what is this? November 14th. IYR, XLE. Now here's ones that stopped out. ERX and XOP. Those are two oil energy plays. And, they took a loss, but that's the point. System will have losing trades, but it keeps those stops fairly tight and allows the winners to run. You could also see that one down there, BNKU, up almost 69%. Bido, that's another Bitcoin, up 48.5%. Next, image number 5. Here's another table, another one of the sections is the Dow 30 stocks. So you can see on the Dow 30 today, McDonald's and TRV had new smart trailing stops. They've had 9 smart trailing stops. You can see McDonald's, the system went long on October 31st, and for TRV, it went long on November 7th. Disney, by the way, stopped out, lost less than 1%. All these others are long. Look at those nice gains, 20%, 16%, 21%. Again, these are Dow stocks, so they're not going to have crazy percentage of moves like some of the tech stocks, Bitcoin stocks. But again, very respectable moves. And you can see what's flat in the Dow 30 currently. Apple's actually flat. It's not in a position. Boeing, Honeywell. Boeing was in a nice position and it stopped out the other day for a nice winner, by the way. Next. Image number 6. Here is the Mega 10. So that's the big cap stock. So you can see what happened today. Meta had a new smart trailing stop. I guess the fourth one. It's up about 6.3%. So it's not up huge. Nvidia up 9%. It caught a really nice trade a while back. A little last year, got out, and then it got back in just recently on December 28th. And you can see the other big cap stocks. AMD up about 32%. Finally, moving back to the general market newsletter. But guys, that's an example of the KISS systems. If you're not a subscriber, you should subscribe to get access to those. And if you're a subscriber and you're not using these, what's wrong with you? All right. Okay, so back to the general market. So here's the index sector table, what transpired today and this week. So you can see nice move on the indexes. Again, not a big move. The indexes were up anywhere from about 0.5 to 0.75%. Nice gains for the week, especially for the NASDAQ, up 3%. As far as the 21 market sectors we follow, more were up than down, but there's a pretty good mixture of up and down. Again, no real big moves here. You can see most of the moves are less than 1% up or down. And you can see the moves for the week. The big losses this week, of course, are energy, okay, XLE, and oil services. Currencies, US dollar was slightly down today, 0.2%. Cryptocurrencies, again, we already discussed that. That area has been uptrending, and there was some news today with the SEC. Commodities, mostly to the downside here. The index DBC down 0.68% today, down 1.4%. Again, largely due to crude oil, guys. You can see crude oil down 1.2%, down 3.3% for the week. Crude oil is basically in a coil. To me, it looks sort of like a fourth wave coil, which is going to break to the downside. Now, if it does that, then we'll look for a fifth wave divergent low. But right now, it's consolidating into a coil. Natural gas, big pullback today, down 4.75%. Copper up 0.6%. The ags were, mostly up, slight kind of mixed. Precious metals continue to be weak, though they weren't down too much today, only about 0.25% for gold and silver. Same for the stocks. Again, they've really had a nice correction. They are at an area where I'm thinking they could bounce if, there's at least the potential. Again, I'll discuss that when we get to there. And as far as the bonds market, the 10-year was slightly up, TLT slightly down. Next. Item number 8 shows the economic news calendar. Like I said, tomorrow we have the CPI on Thursday. Comes out 1 hour before the open. Of course, the initial jobless claims and natural gas inventories. Then on Friday, we have the PPI, core PPI. Okay, let's go and jump to the index charts. So first chart below, item number 9 is the daily snapshot of the 5 key major indexes. So again, as you know, the market had the typical weakness from late July into October, which we called. Market got very oversold in late October, below its lower Bollinger Bands. A lot of things were lined up. Then we launched higher. We had a confirmed breadth thrust indicator. You can Google that if you don't know what it is, but it's generally a powerful signal. And we had this relentless, 2-month uptrend. We had a little pullback here recently. You could see from the end of the year, but that pullback was bought. The mean reversion systems went long there, as I just showed you, caught that trade. And you can see we're basically testing the highs on the S&P. The Dow's been up here, bounced off its 20-day moving average. The NASDAQ is lagging here. I'm kind of wondering if it could still form a lower high while the S&P forms a higher high. We'll see. And of course, the Russell's been lagging too. Next. Chart 10, here's the Dow Jones. Again, the Dow had that vertical move up from the October lows. Remember, guys, my simple theme, whenever you're following a short-term momentum moving average like the 9 EMA there, you can see it bounced off of it for 2 months. Then when you finally lose it on a closing basis, you almost always bounce off the 20-day, and that's what happened. Okay. Again, we are quite stretched up here. You can see how wide the moving average ribbon is. So we get another pop here, we're going to have another MACD divergence. So be aware of that. Market could eventually use a correction for sure. Next, moving back to the S&P 500 chart. So here's the S&P 500 weekly chart, our proxy. So again, we had a 1-week pullback, as you can see. Now, if we go to a new high, basically testing those all-time highs from the January 2022 would be my target. Next, chart 12, here's the daily view. Again, we had that little pullback from the late in the year. Mean reversion systems went long, had a nice trade. Now we're basically testing those highs. Could be a little double top area. If we do break it though, you're going to have some MACD divergence here. And I think that'll eventually set up some sort of fifth wave. So be careful about going long swings right in here now, guys. Okay. Next. Chart 13, here's another daily chart, just zoomed out a little bit more. Next. Chart 14, here's the KISS trend system for the S&P 500. Again, I already discussed the KISS system for a bunch of those various stocks and Bitcoin, stuff like that. But here it is on the S&P 500. So KISS system's done well. Went long back in March, exited in early August. Then it had a little whipsaw trade there in the August into September. Got out, stopped out at the smart trailing stop. Then it went long back in late October. You can see it's raised its stop. Price pulled back recently, tested the ATR, found support there, rallied off of it. Notice we got a new smart trailing stop today. It jumps from 46.13 to 46.84. So we've had quite a few smart trailing stops here, protecting those profits. Nice to see that move up. Chart 15, here's the 4 time frames we like to follow. The upper left is the daily. Remember, at the end of the year, in December, we had all those A's. Now, what are the A's? We call that amateur buying, or it could be amateur selling if it's on a downtrend. But on an uptrend, it's amateur buying. It represents lighter and lighter volume in an uptrend, smaller orders, and you can see that played out. We bounced off the ATR. We had a DeMark 9.5 day and a cycle support. We bounced right off of that. Notice you had the A up there at the highs as well. Was a good signal. And on 130 minute, you have a DeMark 9 now today. Next, back to the standard chart. So here's the half-day chart on the S&P. So again, rallied off this 50 MA here, up testing the highs here, a little double top area. Again, guys, if we make a new high here, this MACD is really going to have some divergence. So be careful here. I'll be looking eventually for a trigger to get out of some of these longs or even maybe take an aggressive short if we set up a divergence. Again, divergence is not a sell signal. You need a trigger, but just be aware we're going to set up some MACD divergence if we form another high there. Next, chart number 17. Here is a 30-minute chart. So on the weekend, Steve talked about these nice, clean downtrend channels. And he said breaking the channel could be a trigger to go long. And we got that right on Monday morning. So again, you didn't have to be long coming into this week. Now, hopefully you were from the mean reversion systems. Remember, they were all long. But if you weren't, you could have jumped right here on this break. It's kind of like a breakaway gap. Easy entry. We've had nice moves up. This was the initial supply zone where we did pull back off initially, but we formed higher highs and right up near that all-time high there. Little MACD divergence here, but again, we're close to the highs. I think we at least tag it, maybe even overshoot it. Chart number 18, here's that 30-minute chart I discussed on Monday. Again, I talked about the support zone, and lo and behold, we came all the way down to the support zone and rallied off of it nicely. Chart number 19, here's a 15-minute chart. I discussed this as well as an education back in on Monday. I talked about these series of lower highs, lower highs, lower highs, and once you finally broke that, that was your break-in structure, and that was the signal to go long. Again, you had a channel there, but that's just a very easy, idealized, simple example of breaking a series of lower highs and getting a long trigger off of that. Chart number 20, here's a 15-minute chart. Again, we had a little supply zone. We blew through that today. So what's left is that 4790, 4800 highs. A little bit of MACD divergence on the 15-minute chart, but I think futures are up tonight so far. We'll see how they open in the morning. And finally, chart number 21, here's a 5-minute view. Just shows you the action the last couple of days. This morning, I pointed out a coil setting up here, and you got a nice trade out of it. You got a nice 20-point trade if you bought the break of that coil. Good, a nice trade on ES future or something like that. Okay. Next, chart number 22. Here's the triple Qs. Again, they rallied this week, but they are lagging. You could see there's still quite a bit of ways from the highs. Like I said, it is possible we could see this not make a new high where the S&P does. Just something to be aware of. Again, if it does make a new high, you're going to have a pretty good MACD divergence here setting up. Next, chart number 23, here's the KISS trend system. Again, this has done great this year as well. KISS system went long back in late October right here, put initial stop at that low, moved it up all those times. Didn't put a new one today, but notice right now price is testing the ATR. So unlike the S&P, the Qs broke its ATR and are now back testing the ATR. So that is resistance. So be a little cautious on the Qs here at the moment. Chart number 24, here's the 4 time frames. Again, very similar look to the S&P. You had all those A's on the daily at the December highs, nice pullback. But again, unlike the S&P, you broke the ATR. Okay, and you're now back testing the underside of the ATR. You had a DeMark 9 and 100 half-day chart, just like in the S&P, bounced from that and the cycle. You had a DeMark 13 on the 130-minute, rallied off of that, and now we have a DeMark 9. Okay. Chart number 25, here's a half-day chart. Get a nice bounce. Like I said, we did have a symmetry break here. This 17.5-point pullback, quite a bit was the largest pullback in the uptrend. So there's still some odds at a lower high here. Again, if we do make a new high, that'll be the new symmetry to break. Chart number 26, here's a 30-minute chart. Again, you can see the channel. This is from the weekend. Steve talked about this. You gapped up out of the channel right away on Monday morning, so that was your trigger. That is what you call a breakaway gap. Remember, a lot of people are scared to go long gaps. They think, if something gaps up, you got to short it. No, breakaway gaps are extremely bullish. Breakaway gaps are when you gap over a downtrend line, okay, on expanding volume. Those are gaps that you want to chase. Anyway, we filled the gap today. That was one of the magnets. And at the moment, we do have some 5 ways up here, so be aware of that. Chart 27, here's a 15-minute chart, just shows you that gap a little better. We filled it, pulled back a little bit into it. Next, chart 28, here's the small caps, IWM. Again, this has been a muted bounce so far. Remember, they lagged all last year. They had played a lot of catch up from the late October lows, got extended. You can see the RSI divergence and pulled back. Right now, they're lagging. You can see they're below the 9 and 20-day moving averages. And probably the best chart is the 60-minute chart. You can see, again, this is from the weekend. I showed it on Monday. This downtrend line, this dotted trend line, and that's exactly where price has been stalling. So this area is lagging. If it loses this area, there's really no support right here. It could have a quick pullback down to this zone, down to around the 186, 187 area. All right, guys, that does it for the indexes. Let's go and move on. Discuss a few indicators here. Here's the VIX. Again, the VIX, remember, went on a VIX Bollinger Band buy signal last Friday. Let's see, Wednesday. Yeah, last Friday. I think that's Friday. And that ended up being a great signal. Again, the VIX Bollinger Band buy signal is when it's trading outside its bands and closes back inside. Next. Chart 31, here's the percentage of stocks in the S&P 500 that are above their 20-day moving average. Remember, I pointed out this divergence last week between that and price, and we got that little quick pullback. But notice the S&P is basically nearing another high. So if it makes another high here, you're going to have a bigger divergence now with respect to the indicator. Again, I'm not saying you go sell your stuff because of that, but it is something to be aware of. Chart 32, here's the NAMO and NIMO. So for now, at the moment, they are still below zero. Remember, they came up with a divergent situation. So that's one of Tom McClellan's sell signals. So be aware of that. This is still trading in a negative position. Next. Moving on to bonds, chart 33. Here's high yield corporate. Market tends to follow this. Now, this is lagging relative to the S&P, where the S&P is basically back to its December highs. High yield corporate is not. So here's the comparison of the S&P to high yield corporate. And you can see what I mean. The S&P testing its December highs, high yield corporate not. So you definitely have a divergence here. And again, the S&P follows high yield corporate. You could see the positive divergence there at the October lows. That was a good signal. And you had another good signal with the negative divergence at the July highs, where high yield corporate didn't confirm the new highs in S&P. Next. Chart 35, here's the 10-year Treasury yield. Again, continues to move up. Remember, I thought this was bottomed back in December, especially from the monthly chart. I'm not showing that tonight, but it's had a nice little move up since. Market hasn't, even though it's been moving up, the market hasn't cared. Really, when the rates pulled back from that 5% area, that all corresponded with the market rally. Chart 36, here's TBT. Remember, this is a long idea I put out a couple weeks ago. That's a way to play a bounce in interest rates. And that obviously gave a nice trade so far from that entry. Just trail your stops up. And chart 37, here is TLT. Again, it moves opposite of rates. Been pulling back as well. 200-day moving averages is below there. Nice move from that broken parabolic curve from October, obviously. Moving on to a few sectors, I'm just going to look at a few here, guys. So here's XLK technology, similar to the Qs. Like I said, it is lagging here relative to the S&P and Dow. Next, chart 39, XRT retail. This is also lagging here a bit, below its 20 and 50-day, or 20 and 200, 20 and 9 EMA. So it could be forming a little bear flag here, perhaps. And chart 40, here's XLE Energy. Again, with that weakness in crude oil, this area has been selling off. We had that bear flag drawn last week, and that's been playing out. We filled this initial gap there. We'll see if it can form a higher low if it just wants to bust down. Next, moving on to commodities, chart 41 DBC again continues moving lower. Again, this is strongly influenced by crude oil. There's a lot of energy names in here in the holdings. Chart 42, there's the monthly. Haven't shown this for a while. Notice on the monthly, again, it's been consolidating for a year and a half, and moving average ribbon is now starting to pinch on the longer term basis. Chart 43, here's crude oil. Again, remember I talked about that it could be in some sort of fourth wave triangle. So if this breaks down, this will be a fourth wave triangle. So if it breaks down, what I would expect is another move down. So instead of 5 being here, it would be over here. Then you would set up a good MACD divergence and then probably a decent low. So that is something to watch for. Chart 44, natural gas. Really nice move out of that coil we were showing back in December. Finally pulling back today. Chart 45, copper. Pulling back from that rising wedge that we showed a couple weeks ago. Of course, this is your big long-term support that it rallied off last year a couple times. Chart 46, DBA. We redrew the pattern here. It's in this bigger coil-like pattern, consolidating. Chart 47, URA, uranium. Uranium had a big pop yesterday on good volume. Today gapped up a little bit. So this area is starting to try to run a little bit. And chart 48, here's the big picture chart of uranium. Remember, I became bullish on uranium back in late 2020. It was breaking out of a multi-year base, Weinstein base. If you don't know that name, Google it. Stan Weinstein wrote a famous book back in the late 90s that I read. And then it was consolidating into a big coil, broke out of the coil last year, mid last year, and it's been moving up nicely. Next, chart 49, UEC. Here's another uranium play. Again, they're all going to move together, basically. All right, let's move to Bitcoin, guys. So Bitcoin's in all the news today. So here's the weekly Bitcoin. We haven't shown this weekly chart for a while. So Bitcoin's nearing that 61.8 fib. That's been a target of mine for a long time. And guys, we called this fifth wave low on Bitcoin in 2022. That ended up being one hell of a call. Now, did I go long a bunch of Bitcoin and just hold it the whole time? No. So my technical analysis chart call was great, but my trading on it wasn't that as good as my call. Yeah, that happens. Chart 51, here's the daily version of Bitcoin. Again, you had your consolidation back here in the August, September, October timeframe, and then just been a moonshot up since. You do have a MACD divergence setting up here. Again, that can be blown out, but you do have a divergence there for now. Chart 52, here's GBTC, one of the Bitcoin, it's not an ETF, trust, whatever. It's like sort of like an ETF, but really, nice move out of this puppy. As you can see, just up, and away. And as I already discussed, the KISS system caught this on the website. It went long on October 17th. 22.16, hell of an entry. It's raised its smart trailing stop 17 times. The trade is up 85%. Chart 54, here's Mara. You can see Mara. Remember, I was looking at a bounce off the 20-day moving average. We got that, and right now it's chopping around. All these are up pretty nicely in after hours tonight from that SEC news. We had this as a long back here in this tight coil. That was one hell of a setup. Next, chart 55, MSTR. Now this one's been the laggard. Lost its 9 EMA, then lost its 20. So I've been targeting the 50-day moving average. Didn't quite tag it. It is up this after hours, of course. And chart 56, Hive. Here's another one. It's up after hours. So these are some to monitor tomorrow. Chart 57, US dollar, still struggling around this downtrend line. We'll see if it can take that out or starts moving down. Really, we need to see the dollar start pulling back to help the gold area. And let's move to gold. Chart 58, here's gold. Again, gold, I called this three-wave ABC pullback back in October, which was an excellent call. Moved up 300 points. You got a blow-off move to that 2150, and so that's being worked off. It's still so recently price stalled the 61 fib. We still have the 50-day moving average. Let's see if this can hold or not. If not, then I think we pull back down to this area. Chart 59, here's another chart of gold. This one has the GDX GLD ratio. Again, the stocks have been underperforming the metal. That's been the problem. If this is a wave C, then we'll likely see gold break the 50-day. So again, we'll see what this does tomorrow. Obviously, people are more interested in Bitcoin than gold. Chart 60, here's silver, just in the same overall pattern. And quite honestly, I keep showing this chart. This is the monthly chart of silver. You got this 4-year coil. When this does break eventually, guys, you're going to have a monster move. So we want to keep an eye on this. But again, it's a monthly chart. I mean, it could stay in this coil for much of the year, but we'll keep an eye on it. Chart 62, moving on to the stocks, here's GDX. Again, the weekly chart, it's on a big coil. It's been selling off the last few weeks. Chart 63, GDX on the daily. So we have a series of higher highs here for now. Here's an uptrend line from the October lows. Again, the onus is on the bulls for this one, guys, to reverse it. Chart 64, there's the 2-hour view. Here it has the ratio. Notice you can now draw a nice trend line on the ratio. Something to monitor, could be a trigger. But again, this area has been just pathetic, quite honestly. So be careful with this area. It's one of the toughest areas to trade. All right, guys, let's follow up with the other trade ideas. We've had some nice ones here. So here's NVIDIA. I put this out on Monday morning. It had just a really textbook coil pattern. And look at that move. Congrats if you caught it. Again, this is about as simple of a trade as you can get. Very clean. Everything was set up. Chart 66, here's Microsoft. I put that out on Monday as well. It was in a coil. It had tested its 50-day moving average late last week. That was actually a good area to go long right there. Put a tight stop just below that 366.50 low. Remember, trading is not knowing being exactly right about the direction all the time. It's looking for spots where you can have a very good risk reward. So if you went long near that 50-day, you could have had an extremely tight stop if you were wrong. But it's been a nice trade. Started to break yesterday, the coil, really nice follow through today. Chart 67, HCAT. I put this out on Monday as well. It was a bull flag. This was my target area, and it hit its target area today. Congrats if you caught this. Really nice trade percentage-wise. Chart 68, AQN, another one from Monday. So it's moved up. Hasn't, had a blow-up move like the others. It's still holding this area, which is now support. This is my target zone up into here. Chart 69, APLD, another one from Monday. It broke out nicely yesterday. Hope you guys caught that. Little consolidation today. This is the potential target zone. Chart 70, AGTI. I had this as a long, but this could actually be a short if it breaks this. But notice you're right at support. So, a couple ways, guys. You could go long here with a stop below the 50-day. If it goes down, then you stop out for a tiny loss. Or if it breaks down, you can short it. Either one. Chart 71, PDD, this little triangle. Still monitoring it. It's not breaking out confidently, but it still looks okay. Chart 72, URA, already discussed that. Duplicate chart. Let's move on. Chart 73, MXCT, one I put out yesterday. Bouncing back, bouncing a little higher now. And here's a couple that haven't set up yet. VAC, I put this out on Monday. Nice bull pennant here. I'm long some right now, and I will add to the position if it breaks this trend line. Target supply zone is up into this range, around $100. Chart 75, BDTX, another one that hasn't triggered. Still on watch if it can clear this 312 area. Chart 76, CUE, Biopharma, another one. Looks okay. Moving average ribbon pinch. If you're long, I'd put a stop probably just below yesterday's lows right there. And chart 77, ACAD, one from Steve. Probably should have just removed that. To me, this looks blah. Let's move on. Chart 78, SMCI, another one, nice coil that busted out. And the final chart, Kathy Woods, anti-Kathy Woods, SARK. Got a nice little wedge down here, MACD divergence, gave a nice trade. Got kind of like a little slanted inverse head and shoulder look. If the market does want to pull back here soon, this could be a trade easily to the 50-day moving average if you break the trend line. All right, guys, that'll do it. Have a wonderful rest of your Wednesday evening. And like I said, Steve and I will be gone next week, Monday through Wednesday. Take care, everyone. And thank you for supporting us at Breakpoint Trades. Take care.